Let's be real for a second. Have you ever been there, staring at a crypto chart that's just going vertical and you feel that pull, that almost magnetic, irresistible urge to just jump in? It's a crazy world out there, right? And so often our biggest decisions are driven by this wild emotional roller coaster of greed, fear, and just pure anxiety. Well, today we're going to pop the hood and really understand the hidden forces inside our own brains that are actually controlling that whole ride. Okay, so let's start with the gold standard, this quote from Warren Buffett. I mean, this is the mindset we're all told to have, right? It's all about strategic patience, thinking long term, and being totally detached from all that day-to-day noise. It's the voice of pure, calm, unemotional reason. It sounds so simple, so wise, and, let's be honest, for most of us, completely impossible to achieve. And here's why. And that, right there, is the problem. Buffett's advice is absolutely brilliant, but our biology, our deep, ancient wiring, it pushes us in the completely opposite direction. We are hardwired for impulse, for quick reactions, and for chasing whatever it is that everyone else seems to be getting. This is where the real fight begins. Now, this internal battle, it actually has a name you've probably heard a million times: FOMO, the fear of missing out. But it's so much more than a meme. It's an incredibly powerful psychological force that can hijack even the most rational mind, turning a smart investor into a totally impulsive trader. So let's break down exactly how this thing works. And listen, FOMO is not just some trendy acronym. It's this deep, nagging anxiety that you're making the wrong call by just sitting still while everyone else is getting rich. In the world of finance, that anxiety gets turned up to 11, morphing into a full-blown frenzy that makes us throw our best-laid plans right out the window to just follow the herd. So how does FOMO get its claws into us? Well, it's a cycle. It usually starts with the comparison trap. You're scrolling online and all you see are people posting their massive wins. That triggers our emotions, right? Fear and greed take over. Then this gets amplified in these social media echo chambers, which leads to herding bias, that overwhelming feeling that you have to jump in and chase what the crowd is doing, or you're going to be left behind forever. Okay, so we've got the psychology of FOMO, but what's really happening underneath all that? On a chemical level. To really understand that urge, that powerful gut-level pull, we need to talk about the neurotransmitter that runs the whole show when it comes to motivation and desire: dopamine. Now, here's the most crucial thing to get. Not all dopamine is created equal. You have your baseline level. Think of it as your day-to-day reservoir of motivation. Then you have these huge temporary spikes, which get triggered by a big win or some other awesome reward. But here's the catch, and it's a big one. After every single one of those spikes, your dopamine level doesn't just go back to normal. It always drops below where you started. And just to put the sheer power of these spikes into perspective, take a look at this. Eating a piece of chocolate? Yeah, that gives you a nice little boost, about 1.5 times your baseline. Pretty cool. But look at what happens with something like amphetamine. It's a massive 10 times increase. We're not talking about a small mood lift here. That is a full-on neurochemical tidal wave. And this brings us to the most important rule in the dopamine game. What goes up must come down, and then some. That massive peak basically creates a neurochemical debt. The higher you fly, the harder you're going to crash, and you're left with a baseline level of motivation and happiness that's even lower than when you started. This is the biological engine behind addiction, burnout, and that hollow feeling you get even after a huge success. So if the problem is being too reactive and constantly chasing these dopamine spikes, the solution seems pretty obvious, doesn't it? For years, the answer we've all been given is mindfulness. The practice of staying present and not getting carried away by our emotions. And hey, on paper, the benefits are exactly what a trader would order from a menu. Mindfulness is supposed to cut down on impulsivity. It's supposed to create that all-important pause between seeing a price go nuts and smashing the buy button. And it helps you regulate the very emotions that fuel FOMO. I mean, it should be the perfect antidote. The case seems pretty closed then, right? We should all just meditate our way to making better trades. But what if I told you that in certain high-pressure, high-information situations, this supposed miracle cure might actually make things worse? Yeah, this is the absolute bombshell finding from a recent randomized controlled trial. In situations where there was a ton of news flying around, traders who had gone through mindfulness training actually underperformed. And not by a little. After getting hit with negative news, they underperformed by a staggering 35.4%. Okay, so let's dig into this because it's fascinating. This chart here shows a scenario where traders are just getting bombarded with news minute by minute. The study found that mindfulness did exactly what it was supposed to do. It dialed down their negative emotional responses. It literally blunted the pain of bad news. But in a market that's moving at lightning speed, feeling less pain actually became a huge problem. By dampening that urgent negative signal, that painful drop in dopamine, it slowed down their reaction time, and they ended up holding on to losing assets for way too long. So if mindfulness isn't the silver bullet we all thought it was, what's the answer? Well, it means we have to go deeper than just trying to manage our reactions in the moment. We need to actually start rewiring the entire reward system that's creating those powerful urges in the first place. Let's look at two different ways to do this. On one side, you've got what's called dopamine stacking. You know what this is. It's when you layer a bunch of rewards together to make something feel amazing. Like going to the gym, but with an energy drink, your perfect playlist blasting, and your phone buzzing with notifications. Sure, it creates a massive dopamine peak, but it also digs a really deep trough and teaches your brain that the gym itself is boring and you can only tolerate it with all those extras. The alternative? Intermittent rewards. Sometimes you have the music, sometimes you don't. This keeps your baseline from dropping, and more importantly, it teaches your brain to actually enjoy the activity for its own sake. Now, the most powerful way to do this is to adopt what's known as a growth mindset. And this is a total game changer. It's a cognitive shift where you start telling yourself that the effort, the friction, the struggle, that's the reward. You start reminding yourself that you are choosing to do this hard thing. And over time, you can literally train your brain to release dopamine not just for winning at the end, but for the process of fighting and striving itself. And luckily, there are some really healthy, totally sustainable ways to support your baseline dopamine without causing that horrible crash. Things like deliberate cold exposure, even just a cold shower, have been shown to raise your baseline dopamine for hours. Real, genuine social connection and just getting some sunlight can also naturally support your entire dopamine system without you having to pay for it later. So, where does all this leave us? We've walked through the psychological trap of FOMO, we've explored the chemical peaks and valleys of dopamine, and we've uncovered the surprising paradox of mindfulness. Now, it's time to put it all together. This right here is the core takeaway of everything we've talked about. The secret to mastering the unpredictable, volatile market out there, it has nothing to do with finding the perfect trading bot or secret indicator. It's about understanding and managing the far more volatile chemical market right in here. Your success is and always will be an inside job. And this quote just brings it all home. FOMO forces you to live on everyone else's timeline, reacting to their hype. Real, lasting success comes from valuing your own process, your own patience, and your own time above all the noise of the crowd. And so, I'll leave you with one final question to think about. The next time you feel that powerful urge to chase a rally, or you feel that panic and want to sell everything, just stop and ask yourself, are you managing the market right now, or is your dopamine managing you? The answer to that question might just change everything.